how much taxable gain does the trust have?
Well, it's a wash.
Yeah, so how does it work, right? So first of all, the deferred sales trust is just an installment sale. So it's a 90-year-old tax law. It's tied to IRC 453 versus IRC 1031 exchange, which is where 1031, which is most people are familiar with 1031 exchange. So they're both tax referral strategies, but they have different set of rules. This set of rules is an installment sale where, let's just say we did a traditional installment sale, Seth, and I came to you and it's a $10 million deal you were selling and you owned it free and clear. You had a zero basis, okay? And let's say you had a 40% tax if you did no tax strategy. So you had $4 million if you would sell. Instead, you might consider a 1031, but you also might consider a traditional seller carryback. And so I come to you and I say, Seth, I want to buy your property for $10 million, but I'm going to give you a $2 million down payment. So if you receive $2 million, that's called actual receipt, okay? So you would owe tax on that $2 million, but that other $8 million is in a deferral state because you did a carryback, right? So this is, you know this, your CPA knows it, a lot of your listeners probably know it. It's just a regular carryback. Here's the difference. With the trust, we actually insert right before a new buyer comes in. So let's say a new buyer had $10 million. They say, you're like, I don't want to do a seller carryback. I just want a new buyer to cash me out. Well, that's what we do. We line up this new buyer as a broker, or your broker does, and they're ready to buy it for $10 million. And the trust jumps in right in between close of escrow. It's like a simultaneous close. And they turn to Seth and say, Seth, I want to buy your property for $10 million, but I'm going to give you a zero down payment in exchange for a note. So Seth, if the trust gave you a zero down payment in exchange for a $10 million note, how much actual receipt did you receive?
There's nothing at that point.
You got it. So we're in a seller carryback, you, the trust, and you, right? Now, immediately they turn around to that buyer who already had the 10 million lined up, was ready to go, and that they're going to sell it to that buyer for 10 million. Okay. Now, if the trust sold it for 10 million, bought it for 10 million and sold it for 10 million, how much taxable gain does the trust have?
Well, it's a wash.
The wash, you got it. They bought and sold for the same price. There's no gain there. So the smoke clears, the buyer takes title, and the funds are sitting in the trust. So I'm going to pause there and make sure you caught that. Any questions on how that just worked?
No, I'm excited. So let's keep rolling with it.